afford right now. So at the moment, nothing on the cards, but need to be alert.
Okay, all right. Thanks a lot for that, Sapna. So, Sapna, clearing the air with regard to ITC. But how do you position yourself in the final hour of trade? Mitesh is back with us. Mitesh, how do you see this expiry play out, and what about a couple of trading picks?
Yeah, good afternoon, Rajat. I think, earlier in the day, I spoke about the fact that this could be slightly deeper a cut and a pullback because the hourly charts were slightly negative with yesterday, last hour fall. And that is played out. We looked at 18,000 as the first level, but we have not got any significant sign of a bounce back from there. So I think it's very likely that 17,850 could possibly be tested in the short term. So I'm not going long here. In fact, I have two sell calls, both from the fertilizer segment, GNFC. That's a sell with a stop at 685 for targets of 640. And Chambal Fertilizer is a sell as well. Keep a stop about levels of 306, 305 half and a target of around 285 on the downside.
Okay, let's talk about Lupin. That's surging in trade after margins and US sales show a recovery on a quarter-on-quarter basis. Ekta is joining us with the fine print and what's gotten the streets so excited. Ekta.
Well, definitely a Q-on-Q recovery which has come in for Lupin, and that is really what has excited the investors because the company had reported what was a very dismal Q1 FY23, but they had guided for a recovery in the US business as well as the margins, so they have come through with that. But in terms of the revenue, it was largely in line with estimates. The street was estimating a flat performance, so they came through with that. Margins were at 11% this quarter versus estimates of 10.7%, so it was in line with estimates, and it improved from the levels of around 6% that they had reported in the previous quarter. Separately, the US business recorded revenues of around $159 million. The street was anticipating around $155 million, and this is versus a low of around $121 million that they hit last quarter. So there has been a recovery which has taken place in the US business. India was sluggish, so India was just about higher by around 3% It did underperform because of their diabetes portfolio this quarter, and largely profit was also below estimates, but the street was squarely focused in terms of the margins as well as the US market recovery. Going forward, a couple of triggers which the street would watch out for Lupin would be sustaining the margins. The company said if things go well, they could probably stick to that exit run rate of around 17 to 18%. US margins, US revenue rather sustaining at these levels and probably going to $200 million with important launches in the pipeline such as Spiriva generic and inhaler, which is slated for the second half.
Thank you very much for that, Ekta. Deven Choksi of KR Choksi Securities is also with us on the show. Deven, now Lupin has been a big underperformer. Earlier there were concerns about US sales slowing down, FDA, etc. So consequently, if you look at the performance in the last 1 year, Lupin shares are down 25%, while peers like Cipla, Sun Pharma are up nearly 25%. So it's been a rank underperformer, nearly 50% underperformance versus some of its peers in the last 1 year. Given that Q2 is showing you, a pretty good recovery in the US sales and some of the triggers that Ekta spoke about, is it time to look at Lupin?
So I think good afternoon. But importantly, in the North America sales, I think the improvement has been seen in this particular quarter. And I think that is possibly the reason for which I think a relatively better performance for sure, because 2/3 of the business I think comes from, 1/3 of the business comes from America and 40% comes out of India and rest from the other parts of the world. So obviously, I think any meaningful improvement in America business, I think definitely is reflecting well as far as numbers are concerned. A couple of questions would be that whether this is sustainable. Now, going forward, I think a couple of inhaler brands that they have acquired, I think that could possibly bring some amount of sustainability as far as I think the margin outlook is concerned. But beyond that, I'm not too sure how much I think it will be sustainable. Maybe I think a couple of more quarters, but we'll have to wait and see. The likes of Cipla, likes of Sun Pharma, who have been overly focused on the complex generics, I think they are relatively better placed because of, I think, comfortable outlook on the realization and the margins. And at the same time, I think the growth continuing from, I think, the American economy, I think much better for them because of the portfolio of products which are, I think, in the specialty generics or complex generics that they have been marketing.
The other one is this news flash at the bottom of the screen. They've been just coming to you. Aurobindo Pharma essentially saying that P. Sarath Chandra Reddy is not in any way connected with the company's operations. So that is the clarification. I'm not sure how much it will do for the stock, but the company saying that in terms of running of the operations of the business, Mr. Reddy is not connected in any way. We're seeing a slight attempt at a bit of a bounce back, but really, I mean, 12% is a very large cut that we've got going at this point in time. You know, the other one is Piramal Enterprises, which is trading with sharp losses. It's reported a massive loss in the second quarter, and the provisioning has jumped quite a bit once again. So pay